What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC right now just a little bit red as I'm making this video about 2 hours before close. I really would want to see a nice big green candle. We had a big open this morning to really signify a confirmed uptrend, which we're not really there yet. It hasn't gone either way, but in this video, I'm going to talk a little bit about that charts just to see where we're going in the future. And then I'm also want to talk about the Regulation SHO threshold AMC being added to the list. I did a little bit of research and I'm going to give you guys my entire take on that. So stick around. You're not going to want to miss this. Let's get rocking into the videos. First off, guys, that 4-hour chart we're looking at, I had told you guys yesterday we got that nice green candle signifying a little bit of a breakout. It wasn't confirmed yet. It really needs a couple more after that to signify a confirmation, okay? And it really hasn't confirmed yet. If you jump over to the 1-day chart here, we're kind of sitting at that same point. A nice long green candle really would have signified a solid breakout. Let me jump back to the 4-hour candle, guys, because this is very important. All right, I've been watching charts for a very long period of time. And if you can see here, I said to you guys, it'll probably be sitting between that $53 and $57 to $58 range. And you can see right here, we are knocking numerous times, 3, 4, 5, 6, 7, 8, 9, 10 on that $58, $59 level, that $60 little bit of psychological level of resistance really knocking down. Well, let me tell you guys, this channel is continuing to get tighter. If you have children, okay, picture it like this. My son is 3.5 years old. I love him to death. Absolutely love that little boy. But sometimes daddy wants a little bit of privacy, and there's only so long you can go with him and knocking on the door before you finally let him in and he comes barreling in. All right. And that's exactly what we are looking at right here. That's why I even quoted an article yesterday, which was kind of pretty cool because a lot of the media has always been negative about AMC, really just quoting the technical level, saying that it is signified for a breakout. At worst, like I said, guys, at worst, we travel down that channel a little bit further, all right, until we can formulate a new pattern, all right, and then the traders get to be able to jump on that. And like I said, the traders are good for the volume, okay? So we're going to continue to modify that or monitor this, guys. It hasn't really, obviously we haven't confirmed the breakout. You would have seen it today. If we were up above that $60 level, I would be telling you guys we confirmed a breakout, but the pattern hasn't quite been broken yet. I'll continue to monitor this for you guys and give you an update. But now I want to talk about this right here. All right, this is the Regulation Threshold Securities. I had to do a little bit of research. I have heard this before, but it's really been off my radar just because, like I said, I don't really follow heavily shorted stocks. It's kind of, just with AMC. But so this was added first that I know of since June 25th. Now, I went back to every single date until April 1st, and AMC was not on it once. I didn't go back any previous because I didn't want to take up too much time. But so let's dive into a little bit deeper about what this exactly means, and I'll give you a kind of understanding of why it actually came to existence. So first off, when you just Google, what exactly is, all right, it also known as a Regulation SHO Threshold Security List. It's a list of securities whose transactions failed to clear during the previous trading days. Threshold lists are published in accordance with regulations set by the SEC. And basically, it also means when they have failed to deliver at least 0.5% of their entire float for 5 consecutive days. Now, there's a little bit of talk on the internet, as you can read some of this right here, saying that they have to clear it up by 13 days, or the broker dealers will be forced to close out some of those failures. However, considering this is a daily rolling thing, you might end up seeing AMC on this list for longer than 13 days. But from this first date, you got 13 days before those failures have to clear. Any new failures might result in having AMC continue to be on this list. So now that we got a little bit of understanding, I'm going to break it down a little bit further, and then I'm going to go over what it exactly means for us, okay? First of all, guys, it was created in 2005, and it says it right here. In an effort to reduce naked short selling practices, okay? By requiring that these failed transactions are regularly reported on the list, it gives the SEC and other regulators a little bit. I have identified that they need, that could be a naked short sell. It could be occurring, and kind of just to bring them up on the radar. Normally, I would just say, yep, this is a brush in the park. However, because of everything that has been going on with the new DTCC rule changes in the NSCC, FICC, and numerous other different rule changes coming into the SEC, really seeming like they're starting to open their eyes at least a little bit more, this might be a positive catalyst for us. Now, this isn't life-changing, guys. Okay, I know there was some talks about GameStop coming on this list, and then after that, it absolutely, shot up an insanely amount. And while the possibility is there that all of these transactions were naked short selling, and the broker dealers is going to forcefully close for these, there's always loopholes for them to get around this. It even says it right here. Although some of these failures may be due to naked short selling, it may also be due to mundane reasons such as technical anomalies and human error, which is totally believable if we haven't done all this research on AMC. But let me break it down for you guys why this came about and what it exactly means. So when high frequency trading, began, it allows you to either buy a stock or short a stock. Either way, instantaneously give you that price. So a lot of times we talk about, oh, there are no shares available to short because we own the float. Well, inevitably, the reason why this rule came about is because it gave short sellers the ability to be able to short a stock right away without having to go through all the time to be able to locate if the shares were actually available. And it actually plays into an inverse effect. So for example, I know we talk about owning the float. Let's just say, for example, we owned the entire float, 500 million. Well, if we go to buy a stock, we go to buy AMC, and we go locate shares and there's no shares available, we wouldn't be able to buy that stock either. All right. And that's what high frequency trading did, rather than old school days like my father, I remember. Okay, or even when I started doing this, there was no Robinhood, no Webull. I mean, I was back on Scott Trade, okay, and even on Merrill Lynch, and certain things would take a little bit of time, and everything was much slower. You go back to my father's shit, you had to call your damn broker, okay? So this really made things speed up, made it the market much more effective. However, there were absolute loopholes. So that's kind of why this came about. What it could mean for us is the SEC's eyes are open a little bit, brighter, especially with everything that's going on. Some of these different rule changes could play into effect. And like I said, if there is any forceful buying that is needed. However, what it also might just do is have them raise their liquidity requirements, okay, in order to keep their margin in balance. That might happen to the bigger hedge funds, but any of these small hedge funds that have really tacked onto this, that have seen that maybe 60 was 60 looked like the ceiling. If you look at the charts, 60 might have been the ceiling. Okay. And they're trying to get out of it just at 52 because this thing's not going back down to $10, but maybe they're just trying to play that 60 to 52 break. Those guys might get caught up in this. All right. And that is going to be a little bit of pain for them. So inevitably, guys, nothing set in stone, but it is good news for us. Okay. It can only be good news for us after all the research and the reading I have done today. And like I said, guys, those charts are still absolutely promising. All right, no matter if I did no research, I literally talked to some of my buddies who are day traders, and I'll feed them the charts, and literally my buddy Cam bro, if you're watching this, buddy, he'll literally be like, dude, this thing is primed to break out. So just from a technical analysis basis, guys, even though it hasn't been confirmed yet, it's still primed. It hasn't been broken. So I'll see you in the next one, guys. Take care.